Welcome back, guys. It's Nick. Appreciate your patience with me. I know I've been kind of sporadic on these videos. A lot of life going on, a lot of kind of balancing as well. So as we're transitioning into more of this keeping people updated cycle, whether that's on Twitch, YouTube, anything like that, to try to keep people in the loop with what I'm seeing. This particular weekend, I was at the lake with the family. Just wanted to kind of disconnect, reconnect. I do that a lot with trading, just kind of keeps my head clear and allows me to back up, reapproach, and come view things a little bit differently. So, as always, not a licensed financial advisor. I do have my Series 763 and my SIE, so no longer sponsored by a firm. So just take what I say with a grain of salt. I'm just kind of giving my input on AMC along with broad markets and just keeping you guys up to speed with some more context on things that I post on Twitter. So right now, as always, just kind of start with the macro. I really wanted to highlight a few things. Obviously, we got the addition to IWB. It's the Russell 1000, kind of your top 1000 companies within the market in regards to market cap size. So that just shows you it's a different compromise of different companies is the best way to kind of understand that. Before we were IWM, so that's your Russell 2000. That's the 2,000 companies based on market cap. Threshold was 7 billion, and AMC squeaked by with like 7.4 billion in valuation, I believe, on that cutoff date, and we actually dropped beneath that afterwards. But because we were above the 7 billion leading up into that, we still got the addition into that ETF and index. So I want to hit on IWB addition, kind of what I'm seeing in the chains, and then obviously your technical analysis. So I always say I'm going to keep it short, but I will try and keep it under 20 minutes here. Really, my main focus on what I want to hit on is basically what has taken place since November of last year. I think it was a huge pivot point across the markets with different kind of things going on, some sort of changes within the U.S. government. Obviously, within our sector, that's kind of when the whole stuff got wrapped up with all the GameStop bullcrap, with the Supreme Court and everything else. So basically, the reason I want to look at this time frame is ever since about November 17th, November 15th was in that time frame. A lot of sectors just completely shifted. Like you can tell whether it's the economy or the algos kind of picking up a sentiment shift based on valuations coming out of COVID and everything like that. Like I think there was a huge shift underlying within a lot of sectors, a lot of companies that a lot of people don't seem to talk about a ton anymore. There's some great trends and good things that can come from this, especially with us being added to the IWB, and I'm going to get into that. So we're mainly focusing on, here's kind of our sell-off. We hit some of our last peaks around 45 bucks, and then we kind of just took a nasty dive down and got into this downward trend, playing off of these same harmonic descending support and resistance lines, along with your harmonic ascending support and resistance lines, and then your horizontal ones that date back 10, 15 years on some of these. So there's some technical analysis that I've been looking at. I don't want to kind of go through all this because we've been through it before, but it is interesting just to see kind of how exhausted AMC has gotten on this downtrend to where it hit oversold on the daily here, here, here for a long period of time. This is where most people thought we were kind of done, and then bounced around off of this RSI down here, even another couple here, and we obviously got our shot up. So a lot of people are wondering, okay, like what kind of influenced this? Like why did this occur here? And we kind of know why we got stopped out based on historical resistance lines that I don't have up here right now. But what kind of buildup did it take for us to get into this? So leading into it, I always like to kind of show people from a market maker standpoint, they're there to kind of regulate the efficiency and volume, validity, or whatever you want to call it within the markets to kind of keep things in line, not allow them to get tilted on one side, but they're also there to make money as well. So you'll notice here, like obviously once we got added to the Russell 2000, it had this deep dive, and then you had your December date rolling around. So to my guess, November 17th, they saw that equity leap expiration in December that everyone thought they were kind of going to get hit on, and they wanted nothing to do with that. So they just ripped this thing down as far as they could, even all the way down to 20 at some point before we took a nasty gap up to 32. Um, and then just kept pulling this down because your ETF date, I believe it was the 17th, or somewhere right within here, on the equity leap expiration. But basically, people are wondering, okay, SPY, AMC, a lot of these kind of just tanked going into last week, um, and heading up into that quad day. Sorry, not last week, the week before. It's been a long weekend in the sun. But a lot of these indices, or different heavily shorted securities, they just got drilled into the ground. Like, yes, it was economic data. Yes, it was things like that kind of forcing a sell off. But at the same time, it was short sellers being heavily weighted to one side, um, that influenced a lot of that because those FTDs were set to be due. So they wanted to basically get the FTDs for as cheap as possible. So happens a lot. Even on the market maker side of things, I know there's only a few of them out there. I'll let your imagination do the rest. That like actually participate in this and get flipped over in their books to where they allow the shorts to go through because they know if they can't deliver them to the market makers aren't going to get any money either. So they're going to facilitate these trades to allow shorting to take place, in extreme measures a lot of the time. So basically, the style I kind of like to get into is this M pattern is on the daily. We got this deep M, and then yes, we had this deeper kind of downtrend. If you look at kind of the markets as well, this was heading into your 318 expiration. So obviously they're trying to keep that thing down as far as possible. Yes, we broke this macro trend and then came down and got a new low here, in regards to this one over here. And we came up to our 318, and then once 318 kind of surpassed, this was also a quad witching day. The following week kind of brought these massive candles because basically this whole week here was making up for this massive downtrend here. Because look where it came back up to, basically up to the 30 mark, even back up to our 34 mark, to where these are all FTDs kind of trickling back in after quad day and deliveries and everything else like that, because your quad day was on 318 here and that kept happening. And obviously markets were a little bit different and dynamic wise. We weren't quite as volatile, quite as red on SPY. But if you look at SPY, we kind of had a similar setup where we got a deep dive down into quad witching day, came off, and then SPY even ran almost right along with us. And we got pulled back down. But what intrigues me on this one is like we got this deep pull down, had a few lid lifts, just basically suppression forced upon. You got Citadel sending out that tweet, again dropping below $10. That increases your margin requirements, and that's immediately. It's not end of day or anything like that. That's a new NSCC rule, to where if the security drops below $10, and it's on the threshold or like the hard to borrow list, your margin requirements increase drastically. So obviously right after that happened, Citadel said they love the movies, XYZ, and all this other bull crap. Trap more premiums here, knocked it back down, shot it back up and trapping premiums. So when you get kind of this coil activity, like it's almost this flipped upside down, which is very intriguing to me, because if you flip this upside down and let's say this is the inverse, this is actually your deeper V, come back up and you make one that's not quite as high. Well, if you look at this, here's your deeper V, kind of this mark here, but it's flipped upside down. Come up here, reach your tip or your point, also touching a macro line, and you come back down, catch a support. Well, this came up, caught this resistance, and then it drove back even deeper to kind of give you your lower low, if that makes sense. Well, when this came back up, this one caught up here and gave us a little bit of a higher high on the W. So I know it's cents and not very much here, but what it appears to be doing is this inverted is the exact same as this. Your deeper V is right here, come up, get to touch up, come back down, and then this is kind of your point here, or this point here. And again, this is inverted, just kind of spitballing based on what I'm seeing, and you get your push up. Well, instead of here, we kind of got our push down, and then this is our bit of relief, and then it kind of gave it another push down. So yes, it kind of breaks that theory here, but what it shows is that the demand is still here, because here's our push down, break up to touch a trend line into a different trading zone, then come back down. And we're kind of ping-ponging here, but if you notice, our ranges start to get tighter, and it's kind of coiling down into like this point here. I think is going to be a very big point, which comes this week, actually Wednesday or Thursday. So when these coils get tighter like this, that's when it really intrigues me that a lot of pressure is being built up. Volumes kind of getting that step back in. Like if you notice over here, we kind of got a few volume hikes in these areas too. But leading up into this, no one like fully believed it until we were trading up at 1884. And by that point, it's like, okay, we got something on our hands, we're reacting to it, and people are chasing from 1884 up to 32, which was a hell of a run. But now it seems like when we're down in these regions, people aren't going to start to see this until we're back above or towards 16. And then that's when people are going to be chasing again, and we'll be looking into this. But what I'm seeing here is very similar patterns to this. So like you got your kind of your deep V's here, and these macro lines are playing into factor here, but it kind of just keeps coiling down into this corner here. And I think this is going to be a very key point this week, and I'll kind of keep people updated as we get onto it. But if we zoom in here, just so you guys can see a little bit better, we're catching this macro line up while also getting resistance on this descending line to the downside that's kind of caught at some key points to where they slipped us under, bounced off resistance here. But what's most intriguing here is like this could happen tomorrow even, is like this vibration zone from 1290 to 1320 has been key for me, along with your macro yellow line in here right at 13. It gets very touchy up here anytime it's in here, and I think it's for good reason, because you notice anytime it enters here, they try to pull it down. When it breaks hard. Resistance, pull it down, break out, resistance down, touches, and then it's kind of just catching this coil here. Well, this whole zone, it could get extended out into August. I don't want to think that's the case now because we haven't even met this resistance quite yet. This little triangle here is really what's intriguing me, because this is where the most pressure is going to be getting built up. And with that, we're getting added to, we already get added to IWB. So with IWB, what I like about this is that IWB has about a 17% weight in the tech sector. I think the next sector weight, 15%, is like finance, but then underneath that there's electronic technology, healthcare, stuff like that. So what intrigues me the most is tech has been getting railed since that November timeframe. Like it hasn't had hardly any time of day to even see anything because of extreme high valuations. You got COVID and everything kind of lightening up. So like you have Netflix that took a dump, Apple, Microsoft, Google, Amazon has the split. Like all this stuff has already taken place. So the fact that it's not only been distributed since November, obviously you got this where you got some more accumulation here, but not only has it been distributed since November, but you have all of these different companies kind of realizing, okay, tech is extremely oversold based on this market cap, and different areas where tech is actually valuable. It's just more of in a sense a consumer staple, to where it depends on the market you're in. If you're in a growth market or if you're in kind of a value market. And obviously with what's going on right now, a lot of it is kind of value, but I think what we're going to start seeing at the same time is kind of a blimp or a glimpse of that. Gosh, I just had the completely biggest brain fart ever. So not only the growth that we're in, like the value that we currently have, we're going to see a glimpse of the growth kind of start to cycle in my opinion. So I think tech is overdue for a strong rally. So IWB, like I said, its highest weight is in the tech sector. So it looks extremely distributed here. Obviously, even tons of gaps to the downside. We got gaps here and arguably down here. So that is the thing that could concern me potentially near term if more market turmoil comes up. We could come down and fill some of these potentially on the Qs. Or to the upside, I mean, there's plenty of gaps. You got this massive gap here all the way up to 299. And then even this one up here that hasn't been filled to the upside, that 356. Like when the Qs start ripping, and if tech does get that rotation that I'm talking about, that's going to send IWB right along with it because that's just its highest concentration. Like if you flip flop the charts, like this is the exact same one as the Qs. That's basically what the IWB tracks. So I like kind of when we got added to them, because before when we got added to the IWM, markets were rallying. Markets were doing phenomenal. I mean, to an extent, obviously. But when they got added to the Russell 2000, that's your biggest market caps within small to medium caps. That's your biggest list of stocks within there based on their market cap. So if the market's thriving and doing hot, obviously IWM, your mid caps and your small caps are going to be the first ones to look at to get shorted. So when they got added there, IWM kind of bounced for a while and then took a nosedive with it because of that small cap, that kind of rotation from value to growth. When in that time frame, they were able to use the ETF shares from AMC, BlackRock, and Vanguard. They were able to lend them out, and it was kind of a different dynamic within the market. So this time within IWB, all of your larger tech companies are very oversold and also in a position to where when they get that rotation within the market cycle to start moving, it's going to be pulling IWB right up with it. Like I said, IWB and the Qs look almost identical right here. So I like that the daily kind of broke over your standard deviation line. I like that it's oversold. I like where we're sitting within that sector as a whole. So this addition to IWB, a lot of people say it's not going to be good. It's going to be shorted out and affected more by the broad market. To an extent, that may be true, but like your top 10 companies is Apple, which I think has maybe some distribution to still go. So like sure, there's some worry there. Largest one is Apple, then it goes Microsoft, Amazon, Google, Tesla, Berkshire, J&J, United Healthcare. A lot of these companies, from just like a dynamic foundational technical analysis standpoint, they've been very oversold since last November. So sure, whatever way you want to spin it, like the economy's shit, everything like that. Well, sometimes the market doesn't fully care about that, and we kind of saw that within last week. I was calling for the SPY run, and not many people fully believe me, but we caught some deep macro trends, and yeah, it probably didn't make sense to the majority, which I understand. But understanding it from a market dynamic standpoint, sometimes that's just how the markets work. A lot of times the markets don't make full sense. But when you look at the right things, understand what's oversold and what area you're in within that, you can kind of gauge on how the markets are going to react to it. Because we went from close of, what is this, 365 up to 390. Like that's a pretty big bull run in 1 week. In my opinion, I don't think it's fully done. I think we still have some more room to go in regards to this on SPY. One thing that could happen, I don't know if it's going to happen tomorrow or when, we could try and fill this gap from about 381 down to 379, which wouldn't be too concerning. I'd rather get it over with. There is arguably another gap down here. But some of these lower ones, they don't always get filled. Maybe it will when the market crashes, like later this fall or into next year. But I think we're about to get a massive rotation into the Qs and the tech sector, and that alone could kind of help AMC now that they're within that IWM or IWB ETF. So if we get in here kind of more on the daily 20-day 1 hour, I can show you more what things are looking like in regards to that, because these are the same macro trend lines. So we'll kind of cover where we've been, where we're going, and what to expect. Um, so yeah, here's that 1290 to 1320 mark. You caught your vibration in here, came down and bounced, and then took off. Same with here, bounced around, and then when we break this 1320 every single time, except arguably here, you got the 50 EMA that's right above you that probably slowed you down a bit. Every single time it comes back up to test this range, this is what I call the vibration zone. It gets extremely volatile and like shaky. Like you can just feel the uneasiness of the short holders or the people on the other side of the trade. It's where they just want to rip it down like this. And we had some macro descending lines above here that I showed you before. But going into this week, what I do like is that we're kind of claiming this 50 as support. If you can look at it here, obviously it got ripped down underneath here, but it's showing primarily staying above the 50 EMA. So now that we've put in this as support on the 1 hour, when this ESD band crosses over the 50, we could potentially see some strong movement in the morning if this holds and the market holds. I think the futures are up pretty nicely right now. We could even go and test this 1290 to 1320 mark first thing in the morning. Now, would I necessarily want that right away? If we could do something like this big candle here and maybe hold it and consolidate within that 1290 to 1320, that'd be awesome, because that would mean we've broken out of this macro and can kind of confirm that if we can stay above this region or use this as support. So what I could see happening if markets are green, we'll go up and test this 1290, 1285 mark pretty early on in the morning. And we could break into this region and bounce around and then come down and close like around 1280, 1275, like just kind of claiming this descending line as support. Or if markets wants to flip and go red, like I said, we got a rising support here. They kind of flushed it under last time. They filled that gap at 1180 and then just flushed it down and then it shot back up. These are very intriguing though. When you get that deep V and then it shot back up, or deep V shot back up, like that just shows that the demand is still there. And it shows the strength on the other side of this. So that's why I don't get too overly concerned when stuff like that happens. And it shows the red sell candle. That's obviously the other side of the trade. So when IWM or IWB got pushed to that, basically what happened was the institutions that own or comprise IWB had to go out and buy those shares. So when that's the case, basically they buy them at market close price. So when it's bought at that asking price, it's not going to influence the price itself. What it is going to do though is it'll take those shares and it'll kind of lock them up from share lending in a sense. And like, hear me out when I say this. Obviously, BlackRock or some of the institutions that may have purchased more of these shares, they have the ability to lend those out. But what happens here is the CTB is also still extremely high historically. So in order to lend those out more, they'll need shares returned. In order to do that, they'll have to not only buy back their shorts on IWM, which is literally a couple billion worth of shorts. They'll not only have to cover those shorts, they'll have to risk covering those while keeping AMC suppressed, because covering is just going to cause the whole market to kind of start shifting back upwards. But with IWB now, yes, they have more shares on that side, but they're comprised within IWB. So IWB, like I said, is the top 1,000 market caps in the market in regards to mid and large cap. So you got Apple, Microsoft, Amazon, Google, all those are completely distributed already. So most likely you're not going to see a ton of shorting on IWB in these regions. So I think this influx rotation within the tech sector and everything within that, like your United Healthcare, Amazon just had that split. Like a lot of these big companies that are going to get at that rotation this week are naturally going to bring IWB up. And when that happens, it's going to naturally bring the stocks within it up as well. But AMC is one of the smallest holdings within IWB. So the effect of shorting versus IWM is going to be much less, in my opinion. So I'm for it. I think the addition to the IWB is important. I think there's a reason why they tried to short it so that it couldn't get within that index. It's very key to understand. I don't think the shorts wanted it within IWB. So basically, that's a small compromise of my current thoughts within this. I know I'm kind of all over the place here. A lot of time in the sun. Last thing I wanted to cover was kind of the chain going into this week. And then I will wrap this guy up. So open interest wise, the thing that I like about this week is like the consistency to the upside. I know it's not a ton of open interest. There's nothing too crazy. Besides some 15s maybe. Your 13s are sitting nice. Heavy volume on those on Friday, which is good. Then you obviously got your 27s sitting at 6,600 versus the downside. You don't have a ton of open interest. Like you got that 8,000 one at the $10 put, which sure, I mean, these 6,000 of these have already been purchased before because you only had about 2,800 volume on Friday. So to the weighted side of things, it's weighted to the call side in regards to that, both volume and open interest. But the one thing that I haven't seen a lot of that's pretty interesting, and let me hop into game mode real quick so I can show you here. The delta comparison. So your deltas just outside of the money, 51, 41, 33. On this side, your deltas are 38, 28, and 19. Literally like 75% of the delta strength on the call side. So that's intriguing. That means call buying will kind of influence price direction a little bit more. You got higher gamma, 0.22. Here's a 0.21, but it's 0.22, 0.2, 0.18. There on the put side, it just kind of drops a little bit quicker. So it just shows the strength is still kind of weighted to the call side, which I love to see. You got your differential here. But this is super intriguing here, and I'll kind of hit on this on Twitter some more, is these spreads that are getting bought. All spreads, like your biggest option bets on Friday were basically spreads. And it was the $20 calls and puts to July 15th. Massive quantities. This is a big player out here coming out of AMX. All these are. And you got some with the 13 spreads. Those expired last Friday. But then your July 1st ones, you got the $13 calls that are kind of your spreads on both the call and the put side. So they're basically trying to pin this as much as they can to prevent or suppress any sort of breakout within the market makers, because these options kind of control the market maker's hand in a sense and can influence what they do within their book to balance it. So that's something I'm going to cover some more within Twitter with some greater details. But I do kind of want to wrap this up and get some sleep. Clearly my head's kind of a little foggy in regards to the weekend and having some good time with the family. So yeah, for the week, things are looking good. I'm excited to see what comes of AMC now that it's added to the IWB, Russell 1000. Your futures are up about 0.25%. Let me back up here. See what we're saying that. Futures looking relatively strong. Sometimes I like to prop it up like this a bit before the market kicks off. I don't usually take futures into account until the next trading day within the morning. Toss just loves to freeze up on me here. So like I said, I'll wrap up the video here. I think your swim's even telling me to catch some sleep. Futures are hitting some key points, kind of back over some big macros. Not quite as oversold anymore. And it's just setting up for a strong rotation back into tech. I think tech is a big sector coming out of this, along with energy. And I think markets are going to kind of thrive off of them again for a little bit. I know downside's coming, but I think that's kind of being kicked to late fall, maybe even early next year. I'm not forecasting that market crash occurring yet, but these are key things I'm looking at. So appreciate you tuning in. I will give you some more insight throughout the week. Now I kind of got my schedule down and back in on the war station a little bit more, and we will keep you in loop with what we're doing within the Discord. A lot of things we're kind of trying to update and look into, along with just being more transparent on streamlining and helping out the general public more with what we can do and educate, because that's the key thing with all this, is to educate those trying to learn and keep them progressing, because this market is a crazy one to hop into to learn with. So, like I said, appreciate you joining. Give it a like and subscribe. And yeah, we'll catch you on the Twits, and I'll be live in Rico's Discord, link in the bio. And let's have a good trading week. I think this will be a fun one. A lot of scalping, a lot of swings to hits here, especially with the rotation. So keep an eye out for that, and have a great night, guys. Catch you tomorrow.